Welcome back, fellow traders, to a new video of Timo trading techniques. In today's video, we will explore a new very simple trading technique with two indicators called SMA. We will also be testing out the strategy in a live backtest at the end of this video to get an idea about what profits to expect. Without further ado, let's dive into the strategy and see what is it all about. First, we add the indicators for this strategy. We go to TradingView and click Add Indicators. Then we type moving average and add the SMA, or simple moving average, 2 times by double-clicking. These are the only indicators we will use for this technique. After we have added them, we go to settings of the first indicator, go to inputs and change the length from 9 to 10. The rest of the settings we leave on default. Next, we open the settings of the second SMA and change the length also, but this time to 20. We then go to style and change the default color blue to red. We are now ready and prepared to execute the technique. We will start by taking an example of a long position. To find a good entry position, it is important to keep a few steps in mind. Step 1. Identify the support and resistance zones before we can take a position. We first have to identify the support and resistance zones based on past price action. These are zones where the price reverses or bounces back. In this example, we see such zones depicted by orange boxes. As we can see, these zones act often both as support and resistance throughout time. You can identify these zones by looking for past price highs, and price lows happening on certain levels multiple times. By doing this, we have a more than fair chance price will reverse when price approaches these levels in the future. Step 2. Wait for entry of long position. There are a few rules to keep in mind when we want to enter a long position. Rule number 1. Wait for the blue line to cross the red line in an upwards movement. We only take long positions when the blue line is above the red line. The next rule builds on the first. This means that rule number 1 must be satisfied before we can consider rule number 2. Rule number 2. Wait for a close of the price above the blue line. It is possible price moves above the blue line for a while, leaving an upper wick afterwards. But we only enter the market when a candle closes above the blue line. We also put our stop loss slightly below our support zone, so price is protected by at least one barrier and we do not worry with the take profit level for the moment. The take profit level will be determined by the upcoming price action, as we will see in the next step. Step 3. Take profit of our position. We can now ride with the trend, so to speak, and we only take our profit whenever the price closes below the blue line. Same as before, the candle needs to close under the blue line before we exit our trade. You can also leave your stop loss at the initial level all the while throughout the trade. Oftentimes, we will take small profits or losses, but whenever price is reacting strongly to our support zone or a strong upwards trend is taking shape, we offset these small gains and losses with some very big gains, as we will see later in the upcoming backtest. I also want to mention the optimal time frame for this signal strategy. After many weeks of backtesting this strategy thoroughly, we come to conclude that the 1-minute time frame works best for this strategy, making this a so-called scalping technique. You may be asking yourself if this strategy is profitable over a long period of time. We will see in a moment if and why this strategy really works by doing some live back testing over a longer period of time after we have watched a short example. But first, if you are wondering on which platform is best to do this signal and other strategies on, then I can highly recommend you Bybit, one of the top cryptocurrency exchanges in the world. Bybit is safe, secured, and transparent. Be sure to click on the link below. You could also receive a nice bonus of up to $30,000, so you could try the strategy out for free. In the next example, we will study a short position. The steps are the same as for a long position, but in reverse. First, we draw one or more resistance zones at levels nearby current price. After establishing our zones, we wait for the blue line to cross the red line in a downwards movement. We then look for a red candle to close below the blue line. If this happens, we are ready and can take our short position and place our stop loss above the closest resistance zone. We let price evolve, and as soon as the price rises above the blue line, consequently forming a closed candle above the blue line, we exit the trade. Once more, we see a nice reward for our efforts in this example. Now we finally put our technique to the test. I will also, as usual, fast forward so we can see the results more quickly. The results are on first sight not so overwhelming. In a period of a week, we made 20 trades. 11 were losses and only 9 were wins. But almost all the losses were very small, and a few of those 9 gains were rather substantial. We finally ended up with a win ratio of 2.27%. This may seem on the low side, but bear in mind, this is a scalping technique, which means the losses and gains are mostly small. Therefore, we can easily leverage our position. If, for instance, we were to apply to each trade in this backtest a leverage of 20x, we would end up with 45% in profit. This also means if we would start out with a bankroll of only $1,000, we now made almost $500 in 1 week with little risk. This can be repeated week in, week out, and after 2 months, our bankroll of $1,000 would grow to over $10,000. A very nice return on our initial investment. And the best part of it all, you could do it too, just by following the steps explained in this video. I want to thank you for tuning in, and I'll see you soon with more profitable and easy techniques. Also, if you like our content and want to see more of these trading strategies from Timo Trading Techniques when they are posted, please click the subscribe button below.